Hi, I'm Kara Murphy, and this is Money with Murphy. Our last piece on AI discussed the impact of artificial intelligence on the broader economy. And in short, while AI will surely have an enduring impact on the way we live and work, its macroeconomic impact so far is quite limited. Today, though, I'd like to focus on AI's impact on the stock market. Over the last couple of years, companies at the forefront of the AI boom have seen their stock prices soar. NVIDIA, which makes specialty computer chips that support AI processes, has been at the forefront of this trend. Other companies such as Microsoft, Meta, Google, Amazon, Apple, sometimes called hyperscalers, have been busy building AI models. Running artificial intelligence engines requires massive amounts of data and power. As such, these hyperscalers are investing in huge infrastructure projects to build things like data centers, which then need servers, electricity, HVAC, and more. This year, those companies are expected to spend $360 billion in CapEx to fuel those investments in AI. That number is up 50% from last year, which itself is up 50% from the year before. These demands are in turn benefiting those companies that build the component pieces. So various industrial companies have cited record backlogs specifically tied to the AI boom. One company reported a backlog of nearly $2 trillion in projects around the globe, of which only 15% have been started. Signs of AI impacting other sectors are continuing to show up in the market. For example, in 2023, companies known as the Magnificent Seven, which include the hyperscalers plus NVIDIA and Tesla, made up 2/3 of the overall S&P 500 return. Then in 2024, those Magnificent Seven companies represented over half the S&P 500 return. Still a very large component of the market's overall gains, but smaller than the previous year. Now, so far in 2025, market performance has broadened, meaning that the Magnificent Seven have made up just over 1/3 of the overall S&P 500 return to date. As the Magnificent Seven have become less of a driver of the market returns, the industrial sector has picked up some of the slack. So far this year, industrials are outperforming the S&P 500. As we discussed last time, AI hasn't yet transformed the way that companies do business on a grand scale, but these trends are indeed impacting the market. Going forward, investors will need to see these massive investments from technology companies actually lead to faster growth and greater efficiencies at the companies that use these AI tools. We'll continue to keep watch, and until next time, invest wisely and live richly.